Today's interview is one you won't want to miss. It's been years in the making. I have the Chief Growth Officer from the #1 lender in America sitting down to tell his story, how an 18-year-old kid was introduced to the mortgage industry and worked his way up to making his life's mission about getting the best out of people and all the lessons he learned along the way. You're not going to want to miss spending the next 30 minutes with me and Desmond Smith. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest, originally from the DMV. He hails today from Motown, and that's Mortgage Town. That is Detroit, Michigan. He's a father of two. He is an avid poker player. He's my new friend, and he's the Chief Growth Officer at United Wholesale Mortgage, a.k.a. UWM, the one, the only Desmond Smith. Desmond, welcome to the Loan Officer Podcast.
Well, thank you for having me, Dustin. It's a pleasure to be able to hopefully spend a few minutes with you and see if we can have a little fun along the way.
Yeah, we will definitely have some fun. Like, we put fun in front of learning, but this whole genre of content is all about edutainment. Okay. And, you know, I spoke earlier today, you spoke earlier today. We're both at Mortgage Con, Orlando, Florida, Universal Studios. Shout out to John and Joe Mota-Whitlock. Shout out to Empire Financial. Yes, shout out to UWM for being a key sponsor, and really all the other sponsors, right? Events like 100%. This don't go on without having really good sponsors. And we actually spoke about business. Yes, and how business, there's patterns, right? There's footprints. Yeah. And you're a guy that has left some amazing footprints for the rest of us to follow in, regardless, obviously, if you're mortgage specific, or really in any industry. So where a lot of times we have a set topic that we're going to talk about, today's topic is you. Today's topic is your journey. It's the life lessons and the business lessons that you've learned along the way, and really letting the people get to know you, because you've had an amazing career, right? Well, like, you got started, you were telling me, how old were you when you entered in the mortgage industry?
I was a freshman in college, so it was in between my freshman and sophomore years. And I went to school in Boston. I went back home to Maryland, right outside of D.C. And so I was 17, 18 years old when I ended up working for FHA.
Wow. So you got started ground floor. What did you do as an 18-year-old college freshman for FHA?
Yeah, I think it's interesting, go back a long time ago. My dad worked for the government printing office. His friend worked for HUD, FHA. And so basically they hired each other's kids for a summer job, which, I always thought, at least at that age, I was going to be a corporate attorney. And so I worked for FHA. I ended up sitting in the room or an office with the two chief underwriters for FHA and the chief architect for FHA. So you think about being a kid, learning from people who are probably my age now, who were setting policy for FHA back in, I think in the 4155 and the 4140. It was an interesting time. Especially for a kid. I didn't have any idea what was going on.
Did you even know what a mortgage was?
Probably not. Yeah. I know my parents owned their home, but I'm not sure I understood that they had a mortgage. Yeah. I kind of remember my father writing a check every month, but had no understanding of kind of the breadth of it for sure.
Yeah. And then obviously you did not become a corporate attorney.
I did not become a corporate attorney.
And, really crazy story, and I'm going to try to pull it out of here. Maybe I'll just, blurt it out and share it. But you were sharing with me off camera how you ultimately became an originator, right?
Yes.
Like at some point you had this dude who is 25 years older than you. Yeah. If not 30 years older than you.
Probably.
And he's one of the two chief underwriters at FHA. Yeah. And he's basically calling you to the table and being like, why you want to become a corporate attorney? It's about the money? Yeah. He's like, if it's about the money, you should check out what these loan originators are making.
Exactly right.
Right? Yeah. And that was kind of your your gasoline or your fire to say, wait a minute, maybe this summer internship, this summer job could be more. And you somehow found your way in originating. Was it while you're in college or was it right after college?
So I'll fast track it. So I worked for FHA in the summer of my freshman year. They called the Boston HUD office and go, we trained this kid. You guys should hire him. And so I worked full time during the school year, my sophomore and junior year, Tuesdays and Thursdays, full time for FHA. I'm 90% sure I'm the youngest DE underwriter ever for HUD.
Oh, wow.
I have no idea what my number was. That's a long time ago.
Yeah.
But I was trained as an underwriter. And in the summers, again, so when I came back home my sophomore and junior year, rather than go back to FHA, I worked for a lender called Independence One Mortgage. And I would drive every single day of my summer and work and underwrite files for this lender. In my junior year, I was going to go back to college, and I'm underwriting a file, and it was a gentleman who made a lot of money.
Yeah.
$300,000 in the early 90s, a lot of money.
That's a lot of money.
A lot of money.
That's like
right?
almost $900,000 a year today.
Yeah. And I remember getting up from my desk and going over to my manager and saying to her, "Who is this person?" And she's looking at me like, "Well, why are you asking?" I'm like, "Well, he makes $300,000." And she goes, "Well, he's a sales manager." I go, "I want to do this." And she called our Boston. We had a Boston office in Sudbury, Mass. And she said, "Desmond wants to be in sales." And the guy named Jim Thaler was a brand. He goes, "Send him over." They all knew my name. I underwrote files, but they never had. I never met them. And so rather than going back to HUD my senior year, I went to work for Independence One Mortgage as an originator. And a funny story, the training, I never forget, I go in, he goes, "Come in." He goes, this is back in the days where you had car allowances. He goes, "I'll give you a $300 car allowance and a $2,000 draw." I was making $2,300, never originated a loan a month. And he goes, "You'll learn." And so he takes me into this office, and he says, "Here's our training program." And I'm like, "Oh, I'm going to get trained on sales." And he says, "There's 3 originators in here. Learn from them. Good luck. See ya." And walked out. And that was the way you're training.
35 years later, 40 years later, and unfortunately, a lot of the industry
still goes that way.
Now, you guys are doing a great job, by the way, over at UWM.
Yeah,
you're trying to buck the trend. Like, you are trying to buck the trend. And I absolutely love that business model. I think it's very forward-thinking. But unfortunately, for everyone else, like I was fortunate. I was brought into the industry at the time by a regional lender, but that regional lender was recognized by like Fortune magazine to be a top 100 company to work for.
Okay.
And what attracted me to them was they had a training program.
Okay. Yes,
like,
sir.
I mean, they put us in a hotel.
Yeah.
Now that training program today, you can go buy.
Yeah.
It's Xenix.
Yeah,
Like
Xenix.
shout out to Casey.
Yeah.
But Casey wrote that program for this company back in the day called Home Bank. And then Casey later left Home Bank to start Xenix, but it was basically what we know today as Xenix Ground School and Xenix Flight School.
Okay.
I went and lived in Atlanta, Georgia for like 7 weeks or 9 weeks and went through this course. And that's what made my opportunity so unique.
Yeah.
But your way of learning for most people was their introduction to mortgage.
And the thing was that, the guy Jim Thaler said, he goes, "Look, credit." He goes, you know how to ensure someone's going to repay us. He goes, "If you can sell, that's on you." He goes, "I can't teach you how to sell," which I think we can, and Xenix has proven that. But that was his ability. He goes, "Sit and listen to these guys, let them teach you, and go figure it out." And that to me, that ability to be kind of free, you set your own. If you're driven and you have kind of a work ethic, you can do great in sales. But a lot of times it's on you. Do you really want it? If you want it, go get it.
Yeah.
Because no one's stopping you, right?
Yeah, you know what? There's a certain component of that, but I do think we don't do the best job as an industry of teaching how to sell and teaching how to market. Like, I've used Xenix, honestly, I use them for the blocking and tackling. Like, I don't want to have to teach you DTI, LTV, calculating income, running MI, reading a credit report.
Yeah.
Like, I ain't got time for that.
Yeah, that's right.
You can go out and get a lead.
Yeah.
And you can speak my language.
Yeah.
Then I can help you get the loan closed. But along the way, like, what I love to do is I want to teach you how to sell.
Yeah.
Teach you how to market yourself, because we don't do that as an industry very well easily. So you obviously, senior in college, you're doing a bunch of FHA 203Ks. You're making more money than you probably imagined. Than your dad.
Maybe I made more than both of them combined.
You probably did back then, right? You probably did 21 years of age. And then you had a pretty awesome career. Like, you were at Norwest back when Norwest, by the way, when you hear Norwest, y'all, it's like Wells Fargo.
Yeah, Wells Fargo.
It is Wells Fargo, but back when they were the player.
The place to be. Yeah.
You were there for how long?
I was there for just under 10 years.
Okay.
And so, a lot of people don't know, Norwest actually bought Wells Fargo, but took Wells Fargo's name because it was a better brand, or at least they thought it was a better brand. But I spent, like I said, almost 10 years there. When I left, I was running things like private mortgage banking, I was running their non-prime division. We had reverse mortgages. I ran all the specialty programs for retail.
Okay.
And so
what time period was this roughly?
So I was at Norwest from 1995. Wow, you say that.
Yeah.
From 1995 to
that was the year that my
2004.
baseball team won state championship, by the way.
Is that right?
1995.
1995.
Yes.
Yeah. And so, yeah, I mean, what's that? 30 years ago.
Yeah. Wow.
I started at Norwest, which became Wells Fargo, and stayed there till 2004.
Okay. And then was 2004 when you went to Fannie? Because you were at Fannie prior to being at UWM.
No,
Yep.
I had quite a few places before I made it to Fannie. I left. So the reason I left Wells a phenomenal company, met some of the best people, probably got the foundations of, in my opinion, why I've been successful. But the truth is I wanted to run retail.
Okay.
And the people running retail were my age, maybe a little older, and they weren't going anywhere.
Yeah.
And there was a guy named Tom Garvey who was at Chase, and he would call me all the time and say, Desmond, you should come to Chase. You should come to Chase. And I'm like, nah, I'm good. And finally, I think I was like, if I'm going to get my opportunity, he's offering it to me. And I get to move to New York. I was living in Boston at the time, and I kind of wanted to make a move. And so I left, Wells and went to Chase. I was at Chase, ended up running all of retail for Chase. At 3,800 people reported up into me. I was in my 30s.
Okay.
And we had one heck of a great run. Everybody had a great run up until the financial crisis, right? And so that was, I stayed there. I left there in 2009 and actually went to Citi.
Okay.
In 2010, and spent another 5.5 years at Citi. And then I always say I spent a little bit of time at Capital One, 15 months. They subsequently left the mortgage business.
I was going to say that was
very smart of them, because it was
they sneezed and got out of the mortgage business.
It was
yeah.
I'll move on.
Yeah.
And from there I end up going to Fannie Mae.
Yeah. So that's always an interesting tale. And I'm sure this is someone that you knew personally, and I knew him personally, and rest in peace. And he's one of my mentors in the industry. But Dave Stevens.
Oh yes.
So Dave Stevens,
Godfather.
Yes.
Godfather of the business.
Yep. So Dave Stevens was my mentor, my sponsor when I went for my CMB. Right. So I get my CMB, and what's the coolest part about this story is I basically cold called him.
Was that right?
Yeah, because he was someone I looked up to.
Yeah.
Right. Like I remembered him when he was the FHA commissioner. Then he was the president of the MBA. He was very vocal and very active.
Yes.
And not afraid to share the way he saw the world through his experiences.
Yep.
And normally, most times, his experiences were like pretty spot on.
Yeah.
And anyhow, I remember when I asked Dave for career advice, and I'm going to see if this is similar career advice or no. This was just a pure career move. Dave told me, he says, sometimes in order to go to the next level, you have to take a big risk.
Yeah.
Hold on. Yeah, step back. What he meant to say is step back, because I heard big risk. I'm like, bro, I'm literally since I'm 21 years old, I've never had a salary, 100% commission, entrepreneur at heart guy. I know nothing but risk. He goes, no. He goes, I want you to walk away from the money.
Yeah.
And I want you to go work for the agencies. He said, do that for 4 or 5 years.
Yeah.
He said, because once you do, he's like, you'll be amazed when you take all of your sales and marketing success that you've accumulated over the past decade and a half at the time it was for me. You add 5 years of working in DC.
Yeah.
And then you see what opportunities open up. He said, but you're going to have to go work on government pay and not on, mortgage sales executive pay.
Yeah.
And I was curious, you spent those 4 or 5 years at Fannie, right? It was you, Christy Fairco, and basically had the country split up in two.
Yeah.
And y'all were running it from a sales side, right?
Yeah.
Like it was you. Who was the head of Fannie at the time?
Andrew Bonsall runs single family. That was basically,
Okay. Is Andrew still there? Or is he
no,
gone
Andrew's
now?
gone. Andrew.
Yeah. You have a bit of a turnover.
Yeah. We basically everybody at the most senior levels all left right around the same time.
Okay. But it was Andrew at the top, and then like you and Christy were either there together or
Christy left probably 6 months after I started. So it was basically me. I was chief customer officer. I had responsibility for all 1,200 of the customers we had probably for the last, I was there 4.5 years. So for 4 years, I basically had all the customers for our single family business.
Okay, so my real question is, was that a strategic career move, or was that that was a really good gig and I really wanted it move? Or both, obviously.
Let's say somewhere in the middle. So, I at the time was at Capital One, and you got to be honest and look yourself in the mirror. I probably didn't make the greatest move going there. I thought it was going to be something.
Yes. Okay.
And I went there.
By the way, that's a great lesson.
Yeah.
Like we shouldn't skip over that. Like that's a great lesson for all of the younger professionals who are tuning in, right? That it's like, look, you have someone as accomplished as Desmond who said, look, I left a great company, Norwest/Wells, went to a better opportunity at Chase.
Yeah.
Left Chase. Maybe I shouldn't have.
Well, with the City. City was a good run.
Oh, City was a good run.
Yeah, it was between City and Fannie where I went to Capital One.
Yeah, and it just didn't work out.
Yeah, I mean,
not every decision can be.
It just didn't work out. I mean,
yes.
And I think sometimes you do your due diligence. Sometimes you don't. I think I did the right due diligence, and we won't go into it.
No, we don't need to.
But yeah, I mean, here's how I describe. So I was at Capital One. I knew a couple of recruiters who would call me, and when he called me, he goes, "I got this great job for you at Fannie." And I will be honest with you, I said, "Are you crazy?" I go, no one who does and did what we did back then, run big sales teams and production, would ever think to or want to go to Fannie Mae. It's just not. It's not what you would think. Fannie, Freddie, you think, oh, that's the secondary market. They don't understand what we do. They don't have any idea. No desire. It's bureaucratic. Just no place you'd want to go. And I never forget, he said to me, he goes, Desmond, this is like the White House calling. He goes, you at least have to take the conversation.
Yeah.
And quickly say, I took a conversation by the name of Andrew Bonsall. He was the head of the single family business. And he said something to me that really resonated. He said, look, you have a good name, good reputation. He goes, and what we need here at Fannie is people like you who can help educate us on the primary market. We know the secondary market. Yeah. But he goes, we don't have a great understanding because no one here has really done it. Some of the smartest, most talented people I ever worked with in my career were at Fannie Mae, but most of them have been there a long time, and they knew the back end, right?
Well, let me ask you, when do you make money on a loan, Desmond?
Yeah.
When do you make money?
I would tell you, most people I would talk to as an originator would say you make money when you originate the loan. And I would tell you, no independent mortgage bank or even a big bank makes money when a loan is originated. They make money when they sell the loan to Fannie, Freddie, Ginnie, or someone else. That's when money is made. So, I would even say, me as a guy who ran a big production, had in charge of pricing and stuff like that, you didn't respect enough of how important the secondary market is to providing financing and funding for us to be able to help consumers all over the country. So, yeah, I would say to you, I went there because I wasn't happy where I was.
Yep.
I got to be honest about that. And, I really did think, and what Andrew said to me at the time, he goes, look, everything on the front end side of the business. He goes, you've originated, you've underwritten. I mean, I've basically done everything on the front end side of the business except close loans. I've never closed a loan, but I've processed.
You're not missing anything.
Yeah.
I mean, shout out to all of our closers out there. We so appreciate you. Shout out to all of our closers.
Yes, we do. Yes, we do. But he said, hey, come here, learn the back end side of the business. Learn about capital markets. Learn about servicing. He goes, you'll have opportunity to present to the board. And he goes, and it'll set you up to do what you want. I thought I'd be CEO. I'll be honest with you. I thought I'd be CEO
of Fannie.
Of a large mortgage company.
What are you now? You're pretty damn close.
I mean,
you're pretty.
So anyway, I went there, and I tell people I spent 4 fantastic years there.
Yeah.
Last half year.
Living back home too, right? You got to move back home for a little bit.
We're outside of where I grew up.
Yeah.
But sure. I can't say a negative thing about what I learned there. I mean, the young lady who ran capital markets named Renee Schultz used to always say, you spend more time here than you spend over your side, because I was fascinated, right? Learn about coupons and how they work. And so it was fantastic. It was a fantastic experience.
Yeah, no, I'm one of those like you originators that I geeked out about learning servicing, learning secondary, learning MSR. And it started with, I had a phenomenal mentor and boss, Eric Egenhofer, invited me to go to secondary with him and Bob Salingo, our VP of secondaries. And shout out to Bob. I know Bob tunes in still. Okay, Eric from time to time still tunes in because he's over running Nova's Home Mortgage. And I was like a kid in a candy store with the questions, like my childlike curiosity. My head was spinning. And Bob, because you talk to anyone in cap markets, nobody cares about what they do, right? Except for the bitch about interest rates being too high, right? Oh, why is our rate sheet, But he loved knowing there's a younger guy that cared
They
about
cared
it
and wanted to understand and learn about the business.
Yes, but like at some point, like I'm a sales and marketing guy. I'm an originator. Like that's what I do for a living. And when I wanted to learn more about the industry, because I had an opportunity, not a Fannie opportunity, right, and not a UWM opportunity, but I had an opportunity to be considered to be a CEO of a top 50 independent mortgage bank.
Oh my goodness!
And I was, youngish. I was, 38, 41 years old, something like that. And I remember thinking, I'm not ready. And the first part of me not being ready was I wasn't ready to move my family.
Yes.
Okay. That was a big part. Yeah. I wasn't ready to lose my autonomy. I knew the minute I took a C-level role, when that company sells, something's going to happen to me, which usually means I sit on the sideline for a year or two. Maybe I get paid, maybe I don't, but I don't get to choose whether or not the company sells. The parent company will. And I also knew I'd have a boss, and I wasn't ready to have a boss, right? Because when you're in sales and you're producing, you don't really have a boss.
You make the rules.
The minute I become a CEO, I have the parent company, and I have the board. Yep. So I have a boss. But part of also me not being ready is I didn't know cap markets. I didn't know servicing. I didn't know compliance as well. So I had two choices to make. My one choice was, I could quit this great job and go start a mortgage company and learn it the hard way. Or I could look to our friends over at the Mortgage Bankers Association and I could go through their CMB process. And that's what I did. Right. So I spent 2 years of my career becoming a CMB because, like you, I was a sales dude, but I wanted to know cap markets and also wanted to be able to, at one point in my career, say, you know what, if you need me to run the company, I can. And I'm a great leader. I'm not going to make all the best trades. You don't want me making your trades. But I can sit down and have a conversation with someone to make sure that collectively the quants who understand cap markets are
talk to people, but they're very good at the
making
side.
The trades, and I'm understanding the trades because I now speak their language, right? 100%. So I totally pick up what you're putting down there. Now at Fannie's, when you met Ish, right? You and Matt with one T.
I did.
You and Matt with one T met through your Fannie relationship.
Correct.
Did he recruit you to leave Fannie to come over to be chief growth officer?
Here's how I would say it. So when I started, I had basically the East, all the big companies east of the Mississippi. Christie had the companies west. So UWM was considered west. I didn't have them. I had Wells and Chase and those type of companies.
Oh, the companies you worked for.
The companies I worked for. I knew everybody there, right? And then when Christy decided to leave and go to Flagstar, I remember her telling me, "You're going to get Matt Ishbia." I'll never forget it. I was like, why do I care, right? And it was at the time UWM was called United Shore, I think, Financial. And I just remember her saying, "Wait till you meet him." And our first conversation is amazing. I'll never forget it. This is how it started. On the phone, and he's he is who he is. He's loud, he's passionate, he cares, and he's like, "How does it feel, Desmond, to have robbed consumers your whole life?" Right? And I'm thinking, what? And he's like, that's his belief system, right, about retail. Right? Brokers are better. Brokers are going to give you a better deal. Brokers are going to give you a better client experience. And I remember thinking to myself, is this guy crazy? Right? And I will tell you, fast forward, I fell in love with this guy's passion, right? He's like, brokers are better. We got to do better for brokers. And he never lost focus on what he believed. And so over time, we did create a friendship. And so he always said to me, if you're ever looking to leave, let's talk, right? And so, it got to a point, like I said before I left, and the COVID time, where I'm like, I'm going to make some move, and he was one of the people who I had the conversation with, and so it kind of worked itself out. I mean, knock on wood, I had a couple of opportunities, but it was for me UWM. Number one, his passion. This guy plays to win every single day. He's not putting anything out there just to put out there to look good. He's doing it because he believes it. And that's why everything at UWM is built to support mortgage brokers, to give them every tool, every resource they need to be able to beat retail. Right? So everything we do. So it worked out, right?
He is solid on his convictions to the core.
To the core. Never loses focus. He never loses focus. I talk about if you're going to do something, you do it 100%. You got to be all in. Everything he does is all in. He doesn't hesitate. He goes, if we're doing it, we're going for it, and we're not going to.
What's he like at the poker table then?
Yeah,
Pretty intense?
I could have been.
Okay.
No, I don't think I don't know. I don't know if Ishmael would be good at the poker table because he's so passionate.
No
typically
poker face.
Typically you got to be able to pull back a little bit. And I don't. You'd probably be like, I'm aces. You're like, well, thank you for telling me. I'm gonna fold this hand.
Yeah. So you onboarded, like, I remember, like, it was around 2017. I'd never heard of UWM, and all of a sudden it's like talk of the town, right? All of a sudden it's talk of the town, and then and nothing is ever coming out of obscurity, right? It's like this show in 2025. Across the board, the industry's going to be like, oh my God, they came out of nowhere. I'm like, nowhere. We've been doing this for 5 years, 5 years. So I know they didn't come out of nowhere, right? Like obviously Dad had United Shore. Matt came in. Matt had the vision, the passion, and they were putting together the pieces. But it was about 2017 down in Central Florida that it was like, whoa, wait a minute. Yeah. And I'm sure there were some timing of mechanisms. Wells and Chase and B of A had already pulled out of TPO, and 2018 was the first year we really saw margin compression on the retail side. Yeah. So all of a sudden, there's the broker channel is coming back to life, right? Because when I got in, brokers were 70% of business, right? And then all of a sudden, they became 7% of business. Right now, you're probably closer to 27 to 31%.
Almost 30%.
Yeah, would be my guess. But you came in; they were already number 2.
Yeah, second largest lender in the nation, largest wholesale lender by far. For years.
Okay. And then now number 1 lender.
Been the largest lender in the nation for the last couple of years. And this is what I say. This is my perspective of it. And I'm with you. When I got to Fannie, I had never heard of United Shore Financial. And they had this hockey stick growth. And it was kind of what you talked about, right? The banks had started to pull back. They weren't, there was the capital requirements weren't favorable. So many banks were like, I don't need to be, too big in this business. And then the independents, and then people like UWM, which then was United Shore, doubled down on it. They said, we don't do anything else, right? We are 100% committed to helping consumers. We're 100% committed to helping brokers win and be able to help consumers. And so it was perfect. And I, at Fannie, what I saw was I had this belief system coming out of retail for 25 years that retail is good, wholesale is bad. But the reality when you work at Fannie is you have all the data. Yeah. Right? I had the FICO, LTV, the DTI, average costs, prepayment speeds.
CRA.
Everything.
Yeah,
right?
everything.
And, the wholesale data wasn't obviously as good as retail, but it was right there. And then it was this company, United Shore, who was delivering a hell of a great portfolio book to Fannie. And I'm like, wow, okay, they are not only doing a great job, but they're right at the top in terms of risk management and how they do things. And I like to say to folks, in my opinion, what brought wholesale back was United Shore. There's other great wholesale companies. I don't talk negative about anybody, but I believe United Shore brought credibility and liquidity to wholesale. And now, I don't think anyone thinks twice about being able to go to a broker and that broker being able to deliver a heck of a great service at a great price and fair costs and everything like that.
1,000%. Matt's passion, Matt's conviction, Matt's inability to back down, right?
100%. Plan to win all day, every day.
But the rest of that industry, that TPO channel, they got to ride in his coattails, right? And look, it's how the world works. There are so many independent mortgage banks out there that benefit from what the MBA does.
100%.
Yet they don't pay the membership dues. Right? They should pay the membership dues, by the way. But they don't have to. It's been really cool to see. Like, don't get me wrong, I was a hater at first. Yes, I'm hardcore originating. I'm a retail guy. Like, you tend to hate the things that are disrupting you and the things that you don't know. And then all of a sudden I've learned, I got to give respect where respect is due. And then I have learned that this is a phenomenal industry. Whether you're a credit union, you're consumer direct, you're a broker, you're a banker, like, we get to change lives. Like, we help the people, we help middle America as originators. I don't care if you're a broker, a banker, consumer direct, credit union. The people that most financial advisors won't take the time to talk to, they are the men and women that we get to share how to generate the most amount of wealth through owning a piece of real estate of their own, right? Like, and along the way, if you're any good, you can teach them that, hey, there's no such thing as a one-size-fits-all mortgage. Hey, by the way, I notice here that you want to put this much money down, but you don't have 6 months reserve.
Yeah.
How about we put less money down? It's only an extra $90 a month, but now you have, whatever the case may be, 40 grand in your savings account, right? And in those types of conversations, I think that's the call to action to mortgage originators throughout the country. And I'm sure it's the things that when people come up to your campus that you're teaching them.
Yeah.
Last couple of questions. We'll have to find a way to wrap this up. Were you there for the IPO, or did that happen after you?
The IPO happened in January of 21. I started in March of 21. So
you just missed
who's
it.
not
Wait
the
a minute.
bright guy?
Wait a minute. Watch this, y'all. So Desmond rolls into UWM. I'm going to do a little timeline for you. One of the most controversial things to happen in decades is when Matt Ishbia threw down the gauntlet and basically said, either pick us or pick Rocket. You don't get both, right?
Yes.
That was like your first week?
That was on March 4th of 2021. I started on March 1st of 2021.
So your third
3 days. 3 days. I'll tell you a funny story.
You were having flashbacks of being at
the night before he did it. I was out to dinner with him, and he said, I'm going to do something huge tomorrow. Now, he wouldn't tell me. I go, and I'm thinking to myself, what mortgage business? We're a commodity. There's not so many things you can do that are huge. Yeah. And he goes, you'll be with me, because it was a Facebook Live thing. Yeah. And I never forget when he did it, I went, I got to get my job back. I got to get my old job back. This is the craziest thing I've ever heard. Because, I mean, United Shore was making a lot of money. It was doing great. But he's like, he believes in his soul that no one should be doing retail and brokers because you get disadvantaged, and he thought it was the right thing to do. And I would say for UWM anyway, it's turned out to be a phenomenal thing, and I think it's helped a lot of brokers and so on and so forth.
The amount of press you got, it all worked out. Yeah, could you imagine that? That's your day 3. You're thinking,
I got to get my job back. I mean, I left Fannie. Fannie didn't get rid of me. I'm like, please, I'm sorry, I made a mistake. I don't know what I was thinking.
So that was day 3, and then you missed the IPO by 2 months.
I missed the IPO by 2 months. Yes. So I don't know. Maybe it's
all good.
Maybe it's worked out a little bit for me.
I'm sure it has. Yeah. Desmond, let me do this. What you get advice. So you're talking to the you 30 years ago.
Yeah.
What's something that you learned because you entered this business that maybe wasn't talked about in your household? It wasn't talked to you when you were going to college. What's that one piece of advice that you would give the you 30 years ago?
Yeah, listen, I think I'll give you a piece of life advice, and I'll give you a piece of mortgage advice. I think the mortgage advice is everybody can buy a home. The question is not if, the question is when.
Yep.
And that's the biggest difference. Most people still to this day believe you need 20% down to buy a home. That is not true. And you talked about this a little earlier about, maybe helping first responders and veterans and people who, like you said, maybe a financial advisor goes, I don't have time to meet with them. But we all know the number one way most people get any wealth is by owning a home. So I always say I feel an obligation to educate people that you can buy a home. You might need to repair your credit. You might need to think differently. And you said something that a lot of people don't think about. I would advise anyone, put less down and have reserves. Because when you buy a house, the heater goes, or the tire blows, or the engine in your car blows, and you need to have some fallback money. Mm-hmm. So putting 5% down and keeping 5% in the bank, to me, I would advise that any and every day. So my mortgage advice would be, everybody can buy a home. Everybody should buy a home. It's not if, it's when. That's first. I say from a life advice, I tell the younger folks who work with me, here's what I think you have to do, whatever it is. You got to do something you're passionate about in life, right? Too many times people are doing something for their parents, or they're doing something for money. And look, I understand you have to make money to survive, but people who do things they're not passionate about, I have way too many friends who are investment bankers and things like that who are miserable to this day. I just say to folks, find something that when you wake up, most days, nobody wakes up every day happy, you're excited to go do it. Whatever that is. If it's being a loan officer, great. If it's being a teacher, go be a teacher. If it's being a paramedic, be a paramedic. And I always tell people, find something that, again, 4 out of 5 days you wake up, you can't wait to do. And I will never say you don't work a day in your life, because I don't believe in that, but you will feel good about what you do, and that passion will drive you. And you may not become the richest person in the world, but for the most part, if you're doing something you're passionate about, you'll be able to take care of yourself and your family.
No, I absolutely love that. If people want to connect with you, are you a LinkedIn guy? I can't imagine you're a TikTok guy, but you're like a LinkedIn guy?
Yeah, I'm on LinkedIn.
Yes.
That's where you find me. I'm on TikTok and Instagram, but just to scroll. I'm not posting, but yeah, Desmond P. Smith on LinkedIn. You know, I post something every Sunday called Sunday Inspiration.
Oh, nice.
I've been doing it for 3 or 4 years,
Okay.
and it's just something that I see and I go, oh, this is cool, motivates me, or gives you something to think about. So happy to share.
I am a LinkedIn person.
Yeah.
Like I would tell people, I used to be hardcore Facebook. I kept that from my wife and kids, and that's my wife's request.
Yeah.
She's like, look, can you keep something private?
Yeah.
But if you want to get a hold of me, I'm very accessible. Like first name Dustin, last name Owen. Check out LinkedIn.
Okay.
Instagram, we're at the Loan Officer Podcast. But what I ask of, especially the mortgage brokers, like your clients, right?
Yeah.
The people you serve, if y'all are looking for really good free sales training and business coaching specifically for originators like y'all, dude, check out our YouTube channel, The Loan Officer Podcast, subscribe, and then slide over to our webpage, TLOPonline.com. TLOP stands for The Loan Officer Podcast. Yep. We're not that creative, but TLOPonline.com. When you sign up for the newsletter, you'll get my newsletter that I write every single week. It comes out every Thursday, but then you will be eligible to join us every single month for free to one of my monthly signature masterclasses that I teach.
Okay.
So like in February, I'm teaching Unlocking the Secrets of Social Selling. Yeah. It's specifically teaching originators and mortgage brokers how they can expand their referral network by spending 30 minutes online intentionally networking. Okay. Right? So it's like the what to do, the what not to do. And then obviously, if you are looking for a business coach or sales training, we offer that as well. I believe we offer the best value in the industry. Okay. Like what everyone else charges $3,000 a year for, like or $3,000 a month for, we're at $3,000 a year. Actually, we're less than that. But it's like 8 live coaching calls. It's being taught by top producers, brokers and bankers, men and women, East Coast and West Coast. So all the information is found at tloponline.com. Great. He is Desmond P. Smith.
That's right.
I'm Dustin Owen. You have just tuned in to the Loan Officer Podcast. Unfortunately, that's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.